Good morning and welcome to our Ashworth Wealth Weekly Market Update. My name is Scott Thomas. Glad to be with you this morning. I just wanted to share a few thoughts looking back over the last week, but also looking over this month, getting done here with the first month of the year and kind of reflecting on where we're at. The big event in the last, well, I guess 2 weeks is we got to, on January 19th, we got up to our record high in the markets. It's been a while since we've been up to our high, our all-time high. Not only was it a high on January 19th, but then we had 5 consecutive days where that mark got pushed even higher. So I wanted to kind of talk about that. And I also want to talk about where we're at as the market right now and where we think things are going over the next few months, kind of give you some indicators and things that we look at. One thing that I wanted to share with you is a slide here. We have clients all the time that ask, man, is this really a good time to invest? If the markets are at all-time highs, am I better to jump in the market now, or am I better to wait until things come down just a little bit? I thought this was a very interesting graph that shows a 1, 2, and 3 year. Now, these are just averages over from 1988 to today. The 1, 2, and 3 year on putting money in on just any average day or putting money in on the day that we have a new high. And the graph shows that putting money in at the new high has actually outperformed just any other day. Now, that's not an indication of what's going to happen in the future, but in the past, being at the high is a good time to invest. So, will that continue on? Don't know. And that's kind of what I want to talk about right now is what's going on in the market. So as of right now, the Fed actually met yesterday. They're meeting again today, and it looks like they're expected to not do anything with interest rates as of right now. They're scheduled to meet 8 times this year. They'll meet more if they need to, but as of right now, they're scheduled to meet 8 times. So assuming that rates stay even today or stay where they are right now, the next time that they'll look at that is in March, and then after that, they'll meet in late April, early May. So as of right now, most experts believe that they're going to leave interest rates as they are for now and kind of continue to wait and see what happens. But I wanted to give you just maybe a little bit of an update on where things are at with inflation and kind of where we're at. The good thing is we've talked about this in the past. The economy has actually done relatively well, especially compared to what most economists predicted at the beginning of 2023, when many predicted a hard landing in the economy. And what we've seen is we haven't really had the hard landing. In fact, we haven't really even had a soft landing. The markets have continued to do well. Companies are continuing to earn money. Stock prices continue to be high. But inflation has been one thing that has really plagued the market over the last year and a half. So as of right now, inflation sits at 3.35%. Now that was a little bit disconcerting. That's a little bit up from last month when it was at 3.14%. However, a year ago at this time, it was at 6.45%. So inflation is largely under control right now, and we see that continuing. And I think the Fed is just sitting back and kind of waiting to see what happens. Most experts agree, or most experts predict, that there will be at least one, two, or even three rate reductions later in the year. But I think as of right now, it's kind of a wait and see what happens. Um, let's see what else. Mortgage rates. I looked up mortgage rates this morning. Mortgage rates still remain high. Those are lagging behind interest rates and inflation. However, they have gone down just a little bit. So the trend is that they've been trending in the right direction, but those are not down as low as we'd like to see those. It's still a very hard time to get a mortgage. As far as the earnings go, companies continue to make money. You don't have to go to a restaurant or a store, especially restaurants on a Friday night, to see how busy they are, and people are continuing to spend money. That is a good thing. That's continued to keep prices up, and we expect to see that continue. So, where are we right now at Ashworth? We are still optimistic about the markets. We still anticipate having some ups and some downs like we had much of last year. We also anticipate there's going to be lots of speculation on interest rates, what the Fed does, and we think that things are going to continue to bounce around based on what the Fed does and what they say. So we're going to be watching very closely coming up here what happens today and what they announce today when they're done with their meetings. But then also looking forward in March and into April and May, we'll be very interested to see what the Fed says and what that does with inflation. So if you have any questions, please give us a call. Hopefully this was helpful. We actually like watching this kind of stuff. And we've been quite surprised over the last year how resilient the economy has been, and we expect that to continue. So, again, we're grateful to be able to spend some time with you today. If you have any questions, give us a call. Feel free to pass this on to anybody else that you think would be interested in this, and we will be back with you next week. Thank you.